Welcome back. You're watching Dukascopy TV. I'm Darren McDermott. I have Neil Standen from GFI Securities Limited in the studio. Welcome today. So Neil, let's begin with looking at the ECB. Now, do you think investors should be putting money on euro weakness as the ECB contemplates quantitative easing?
Interesting. We've got a meeting on June the 5th, which is the ECB Governing Council meeting. But I think a lot of it's been discounted already because we've seen euro-dollar touch 140 earlier this month. And following Mario Draghi's comments, the euro-dollar's come down to sub 137. So I think a lot of the action will probably be priced in. It's an interesting at the moment. We'll probably see them bringing in negative deposit rates for the deposit facility, and they'll probably bring in some credit easing measures as well to try and get some people lending again, and desperately try and get the inflation numbers up because Mario Draghi has been on record on a number of occasions saying how concerned he is about the lack of inflation, and also he's had a recent rally against the IMF as well, who've given him some advice on how to run the economy. But he's caught between a bit of a rock and a hard place at the moment because he's very dependent on what the US do. So we'll see, June the 5th.
And speaking about actions to expect from the Fed, now do you think we will continue to see a renewed strength in the US dollar due to the pickup in the US economy? And what sort of moves and actions are you expecting to see from the Fed? And where do you see the US dollar heading?
Well, the last time we spoke, we said that US rates may actually go lower before they went higher, and that's certainly been the case. I mean, 2014, we've seen the 10-year Treasury bond yield down to a 10-month low. And I don't think the markets were expecting this. And this, as I said in the previous question, is what's really affected how the ECB act.
Of course.
Janet Yellen, the new Federal Reserve chairperson, has been talking the dollar down as well, saying she wants to keep rates lower and for longer. So we've seen a constant depreciation, and a phrase that was coined nearly a year ago, taper tantrum, which was brought on by the then Fed chairman Ben Bernanke, how the markets responded to potential Fed tightening. And a year on now, it hasn't happened, and a lot of financial commentators are saying that nothing may happen until the middle of 2015. So it could be a 2-year spell from when the markets suddenly thought there was going to be a dollar appreciation to when there actually may be, all of which doesn't help the ECB. So
in the medium to long term, how do you expect this to have an impact on emerging markets?
Well, the emerging market question is complex. It was only a few months ago we saw some huge outflows of money brought on by what people thought was going to be a dollar currency appreciation. I mean, that hasn't happened, and a lot of confidence is now returned, and we're seeing a lot of the players come back into the market who are hungry for yield. Turkey and Russia and South Africa all raised their rates a few months ago to defend their currencies, and now nothing's really happened, and we've just seen Turkey recently cut their rates. Russia cut down the amount of FX intervention within their parameters of how they manage their stuff. So what we've seen is these guys get a little bit of confidence. There's quite a low volatility arena at the moment, especially in the foreign exchange asset class, and that's given up to people getting back involved with the carry trade, and that's driving some of the appreciation of the emerging markets as well.
Neil, thank you very much. And thank you for watching Dukascopy TV. Now do stay tuned as we have plenty more heading your way. See you very soon.